seeing here in the near term is this hammering on this resistance line. And I'm in the camp that I do think eventually we're going to break through this, which will give us a near term. And I stress near term, but a near term pop potentially as high as 20,000. Yeah, so I'm kind of in the camp where I still am in thinking we have a near-term pump, right? So I do think that complacency is there. I think there's a lot of bears out there in Bitcoin and crypto land. And so for me, looking at the charts, it also confirms it. In fact, let's bring up a chart right now so we can take a look. So what we basically have is this beautiful wedge pattern, right? You take the highs going back to May, it connects perfectly to the high in August, which then connects perfectly to September and then all the way through here. And then same thing from the June low, you can kind of connect these lows. Now, what you're seeing here in the near term is this hammering on this resistance line. And I'm in the camp that I do think eventually we're going to break through this, which will give us a near term. And I stress near term, but a near term pop potentially as high as 20,000. The reason I'm getting 25,000. The reason I'm getting 25 is basically by taking a parallel from these lows and stretching it up and basically looking like this would be the upper range of that parallel line connected through this point here. So I think that's a possibility. I think that would get a lot of people very, very bullish. But one of the things we have to recognize is that this, and even a pop to 25,000, it's still inside of a macro bearish pattern, right? So you have the down move here, all inside bar action, even up to here. And therefore, my midterm is still for further downside. So I'm near-term bullish, midterm still bearish. I still don't think we have a bottom in Bitcoin yet. Yeah, so I understand the midterms angle and the Fed angle right there, but really, if we look at the chart, what's so interesting is that the wedge pattern ends, and this is where the point is, right around the October 29th-ish area. What that tells me is that you're going to either get a breakout or a breakdown between now and then, right? I don't know if it's going to be tomorrow or if it's going to be on the 29th, but price is going to be forced out of this wedge pattern. And usually what we see, especially following these really quiet periods in any asset, is that when you get that break, it's explosive. So again, my guess is we actually see the beginning of the move before the Fed and before the midterms. Whether or not it continues in that direction when we get the Fed in the midterms, that's another story. But I think it actually will happen probably in the next week, as we see here by the 29th. So that's a great question. And number one is you still do see the opposing move on a shorter time frame. So like let's actually go to the 10-minute chart. And what we can see here on the 10-minute chart, I'm going to get rid of this trend line. But if I compare the DXY, look at what we have here, right? So notice how here's your DXY dumping, and then here's your Bitcoin popping, right? And so you see this movement up and here this. So you do see that opposing factoring out, right? Where the dollar goes up, Bitcoin goes down, and vice versa. The only other thing that you can say, though, is that on a daily basis, if we go back to that daily chart, you don't see that as much. We actually can't see this.
I don't think you're sharing your screen.
Oh, my apologies. I got to
you're okay.
Show that screen. All right, let's go back to it. Let's go back. I apologize. So basically what I was showing here is you can see today alone, this is the 10-minute chart, you can see when the dollar was falling, we did see Bitcoin rally up, and then as the dollar bounced back and went higher, we saw Bitcoin kind of come down. So you do see that, kind of that opposite move going on. But the interesting thing, and you're bringing up a really good point here, is that if we go to the daily chart, you're not seeing, the dollar's been going higher quite a bit, but Bitcoin's not going lower in the bigger time frame. And the positive to that, I don't think it's manipulation. I think it's a combination of, number one, you do see a little accumulation probably by smart money here. Number two, I do think that with all the currency issues going on, so we see the dollar. I mean, look at some of these charts. Let's go back to charts. Like, let's look at the USD JPY. I mean, look at this move up in the dollar yen. So you have that. Then you have the Bank of England already intervening because the pound is collapsing. Then you have the euro, which is now below par with the dollar. And I really think that some of these other citizens of these countries are probably putting a little bit of money into Bitcoin to try to protect themselves from what's going on with the dollar and their own currency. So I think there's a combination, but either way, it's a really healthy thing for Bitcoin to do. right? I love when Bitcoin starts to behave abnormally from what we're used to, and that's what we've seen on the daily chart recently. And
Yeah,
again, keep in mind, whatever it is, it's really minor, because if you look at the volume in Bitcoin over the last couple of weeks, it has been so small. So it probably doesn't take a lot of people. So it's not like it's a massive inflow of billions and billions of dollars. It's just there's some buyers that are kind of piquing their interest because they're seeing their country, like the UK, is just in disarray right now because of what's going on with their currency. Their prime minister just resigned today. So all of that's kind of going on. And I do think it coaxes in a few buyers, but that's what you want to see. We want to see Bitcoin as a safety net where people run to it. And so it's good to see that at least occasionally, and it does appear to be happening. And Frankie, also keep in mind, and I think this is good for everyone to hear, is that a good technician is able to reevaluate basically daily on their targets, and targets do shift, right? You see new things in the chart every day. You're getting new information. So like when I was out when Bitcoin was 68, 69,000, saying 20,000, that was my target at the time, right? Well, now it's been achieved. Now I have to say, okay, well, what are the charts saying from here on out? And that's where it's kind of changed a little bit for me, where you see what the Fed is doing, you see their lack of printing of money in this bear cycle, and it's making me say, okay, you know what, this could be a bigger cycle to the downside than where we are currently.
Really important that you said that.
Yeah, and not only that, but like there are situations where I have targets that, based on the current factors, is the target, and then you can actually see that target change, meaning that you may not even achieve that target, and all of a sudden a good trader will update it and say, I thought Apple was going to go to $75, but based on the information now it's 95, or now it's 100. And so you have to, people kind of, whatever you write, especially on Twitter, is like in stone. It like can never change, and they hold you to it. But really, in the world of investing and trading, the best traders are the ones that do adjust. Anyone who stays rigid, they're the ones that get crushed. Yeah, so I think it's important to kind of have an open mind where, especially on an asset as recent as Bitcoin or cryptocurrency, I mean, yes, it's been 4-year cycles, but there's only been 3 of them, right? So, I mean, it's only been around for 12, 13 years. So you don't have that history of like a stock market or anything. And by the way, I think we have to kind of recognize that you had stock market cycles that were intact, and then the Fed started printing in 2009, and we really didn't have a bear market for 13 years until now. And so what that does to me is it kind of says, maybe we have to be open to things changing here. Maybe the cycle won't be as short as past bear markets, because we know that the Fed is not printing money like the past cycle. So you could argue very easily that the Fed kept the cycle intact because they were always printing money, but now they're not. Does that mean the cycle could be longer? So I think as a trader, and I think you would agree with this, is that you never want to hold yourself into that rigid, this is what it is, so it's always going to be like that. Kind of just go with it, and then look for the chart to signal when it's finally bottomed, whether it's a flush out, whether it's panic, and that creates that bottom, the volume patterns, the bottoming tails, all those different signals, and then let that kind of dictate whenever that is.
More. Go ahead.
No, I was just going to say, and you're 100% right. I mean, it's a tricky scenario, right? Because you have certain things that are going to come up with the Federal Reserve. So number one is they're going to at some point stop hiking, and that's going to be that first pivot. But stopping hiking and keeping interest rates, let's say the Fed funds rate is at 4% at that point, that doesn't equate to printing money again. It's just they stopped raising. So that's kind of that first pivot. Then the next pivot would be when the economy really starts getting into a bad recession. They'll start dropping rates, which does increase liquidity in the system, but it's not quantitative easing yet, right? And so then you have that final one, which I do think would create that bull market again for sure, which is where they actually start quantitative easing again. So there's kind of like a 3-step to the Fed, turning things around, which then would create that bull market. And by the way, I don't necessarily think Bitcoin needs that to have a bull market. It's just really, really helpful. Yeah. So believe it or not, so I was originally in the 12. Well, once we got to 20, I said, okay, now 12 to 13,000 is my upside, my high end target. Now everyone's saying that, and that makes me nervous. I'm like, okay, it's either not going to get there or it's going below. I'm in the camp that it probably goes below. And so interestingly enough, I'll show you where my current kind of zone will be, and it is below 10,000. So certainly I'm still a buyer below 10,000. But let's take a look. Let's do a trend line here. And if we go to our weekly chart, and we go back here. So let's take a look here, right? So what if we take just before the first bull run in 2017, we put a little trend line and we connect it through this low, all the way through there. And that target is right around, let's say, 8,000. Now, it's an upsloping trend line, so in a few months, it'll be slightly above that. But that's kind of like where I could see this thing coming back to that longer-term trend, and it makes a lot of sense. And I'm in the camp where, like, you know, if you really think about other bear markets, like in the U.S. and the stock market in 2009, I mean, there was literal panic out there. People wouldn't even open up their trading platforms. It was so nasty, right? And you go back to the .com collapse, same thing. You go back to various commodity collapses. And I don't think we've seen that in crypto. Like, I don't see people saying crypto's done, it's over, it's not going to be anything. And that's what, to me, would mark a bottom. So I kind of feel like we need to almost go below 10,000 just to get that fear and panic and people kind of throwing in the towel effect. And then maybe we can actually see a bottom. So I actually do think we probably do pierce 10,000 on Bitcoin, and I will be absolutely buying it there.